A week ago, there was little talk of rate hikes ahead of the election. After a sharp rise in inflation last week, there is now a flood of professional opinion that officials will raise interest rates on Tuesday. Prices are rising faster now than they have been in 20 years. The March quarterly results were a blow to a government running for re-election amid cost of living pressures. Maybe not fatal, but still hugely destructive. Official increases will only add to the pain and political embarrassment. But forecasters missed one thing. This has nothing to do with the independence of the RBA and its desire to withdraw from the political process. Here's the thing. The RBA really doesn't want to raise rates, at least not close to what many now consider inevitable. Of course, there is a logical argument that with unemployment below 4% and headline inflation above 5%, the economy appears to be overheating. In this case, the 0.1% urgency rate doesn't make sense. The Reserve Bank of Australia will meet on Tuesday to consider raising interest rates for the first time since November 2010. But over the past 30 years, the RBA, working with the Australian Prudential Regulation Authority, the banking regulator, has helped create one of the largest asset price bubbles in the world. If it dissipates, it will wreak havoc on the financial system and the economy. Australia is now finally a prisoner of real estate. We are not the only country that allows this. But we are one of the most egregious examples. Our banking system, which has thrived for decades on the back of soaring real estate prices, is now hostage to a $9 trillion behemoth. For years, while our politicians have blamed each other for relatively insignificant sovereign debt, they have easily overlooked the Achilles heel of Australia's real economy: household debt. This now shakes our central bank. It is unlikely to raise interest rates anywhere near the level required without causing havoc. As perverted as it may seem, our precarious personal debt situation may be salvation for those who are ready to receive eyeballs lately. We can't afford so many people going broke. Rocks and hard spots. Global stock markets, including Shanghai, have been battered in a turbulent year. Ali GE.